Hello, welcome to this Ned Davis Research podcast, where we will help you see the signals. My name is Brian Sanborn, NDR's Global Head of Investment Solutions. 'Tis the season for year-ahead outlooks. In this episode, we will be speaking with NDR's Chief Economist, Alejandra Grindal, about her thoughts on the global economy for 2026. Alejandra, in aggregate, what are your expectations for global economic activity next year?
Oh, I would love to share that. And you're right, Brian. It is the season for outlooks. So as we head into 2026, we expect global real GDP to increase 3%. So this is likely going to be just slightly below this year's pace, which will probably come in at around 3.1%. So very, very similar. So this growth rate is below the long-term average, but because the growth rate's almost the same as this year, it suggests a low risk of a sustained global slowdown, and even worse, the dreaded global recession. And this is quite important for investors. Macro matters, right? Because cyclical bear markets in equities have historically occurred in or around sustained global slowdowns. And of course, the worst of them tend to occur around these global recessions. And there are a fair share of positive elements that could impact the outlook. Not only is the global economy starting off in a favorable position, so a good starting point always helps, but global monetary and fiscal policies are also expected to remain quite accommodative.
What are the risks to the outlook?
So obviously there's quite a few, and the risks for next year is very similar to the big risks we saw for this year, and it's just heightened global economic policy uncertainty. Now, it is worth noting it is down from its Liberation Day peak in April, but it still remains historically elevated. Of course, the outlook on tariffs, it's still uncertain. There are a fair share of unresolved wars, and then many governments, including a lot of large ones, such as the US, France, and Japan, are still dealing with political gridlock. We get a lot of questions about AI. In our view, at least for 2026, with respect to the global economy, it's kind of a mixed bag. So just to kind of look at it big picture, I think all of us are aware that we're seeing demographic decline due to falling birth rates, also a lot of these recent reductions in immigration. This is a bit more prominent in developed economies, but even in some emerging economies such as China. So it means that a lot of these economies have to rely pretty much solely on productivity to maintain a strong growth rate and to boost that potential growth. So kind of the point of AI is we could see a much needed boost to productivity through its widespread implementation. But if the potential benefits of AI, say, are overvalued, at least in the near term, this could have a negative impact on the global economy and financial markets.
What is your view on inflation for next year?
Yeah, it's a great question. So at least on a global aggregate basis, we do expect global inflation to continue to ease in 2026. But sort of contrary to the pandemic reopening, where everybody saw higher inflation for a lot of the same reasons, the paths by economy are now very more specific to those individual economies. So, for example, in the US, we expect inflation to actually stay above the Fed's target next year. So very different from this global number. And this is due to tariffs and immigration policies. And this is being confirmed in a lot of leading indicator data we're looking at. On the other hand, China's inflation may pick up slightly due to government efforts. They've kind of engaged in these anti-involution efforts, trying to actually reduce competition to increase prices. But we still expect inflation to remain below 1%, which is quite low. On the other hand, inflation rates in the Eurozone, the UK, and Canada, we expect them to be roughly in line with their central bank targets of 2%. Japan, which was that, constant low inflation, deflationary economy, they were in this multi-decade deflationary trap. Over the past few years, they've actually have gotten out of that trap. However, we do expect inflation to cool in Japan slightly, just due to base effects and tighter monetary policy.
Lastly, can you summarize your outlook for individual economies?
Of course, I'd love to. So I'll start off with the largest one, right? US. So we expect real GDP to increase 1.25% to 2.25% in 2026. Pretty wide range, kind of reflects that high level of uncertainty I talked about before. And you'll notice that the upper level of that range is roughly in line with potential real GDP growth. So chances are we'll probably still be growing under potential next year. In terms of positives, we have fiscal stimulus from the One Big Beautiful Bill Act should help CapEx, even outside of just AI-themed CapEx. Also, easier monetary policy, that always helps too. But that'll be partially offset by the ongoing structural risks associated with tariffs and immigration policies, which weigh down on potential real GDP growth. In China, we expect real GDP to slow to a growth rate of 4.25% to 4.5% in 2026. Now, the caveat is once we get the government's growth goal for 2026, that's very likely what growth will end up being. So this is subject to change. This is just where we see things right now. Because it partly reflects China's easing potential growth, but also the government's latest 5-year plan. It aims to focus on higher quality growth. They want to increase self-sufficiency. They want to rebalance the economy toward more consumption, which makes up a very small share of the economy. The issue is growth is strong, but it's heavily tilted toward industrial output and exports, overseas demand, not the domestic economy. So it just makes the economy extremely vulnerable to these outside risks. Finally, with the Eurozone, we expect the economy to expand 1.1% next year. And that's very likely to match this year's growth rate. We're not there yet, but we expect it'll be around there. We expect easy monetary and fiscal policies should help kind of boost the expansion. And also contained inflation should help boost real income, that purchasing power. At the same time, the region still faces higher tariffs in the US, higher than before the Trump administration took place. And then also intense Chinese competition. So this impacts major industries, manufacturing industries, as well as a lot of the core economies. And then can't forget about that heightened political uncertainty. And it's also important to note about the Eurozone, they have very low potential growth. So ultimately, this just limits the region's sustainable growth path.
Alejandra, thank you for your insights. NDR clients can read Alejandra's research notes in her Global Economic Focus publications. The indicators Alejandra and the research team developed for our subscription service are also used in our model portfolios, which are available for direct delivery on TAMPs and as ETFs. For more information on NDR, we encourage you to visit ndr.com. Also, for those listening in audio-only mode, video versions, including the charts of See the Signals, are available by going to info.ndr.com/ndr-signals. Thank you for joining us as we help you to see the signals. So long.